everybody. Well, doing it your own way is my motto of the day. You need to be clear and precise in your own methods and act against the crowd. Find your own opportunities. Hi, my name is Richard Lee and I manage the stockradar.com.au website for you. Stockradar runs a quant strategy based on high probability signals to create a trading edge for you guys, okay? Later on in trading tactics, I'm going to talk about a 3-point plan to try and help guide you and keep things fairly simple that will help deliver you to some trading success. But you must be able to do it, and that's a bit of the theme through today, because a lot of us have a little bit of trouble actually doing it part. Okay, what does Stockradar do? We educate investors on such things as price analysis, risk management, discipline techniques, systems, behavioural analysis and processes, trading models and portfolios. All these are explored in my website to help you understand the market and trade better. We have our unique trading centre that leads by example to show you how we put it all together into a real-time trading process. Okay, so let's get on with it. Today we're going straight to the markets. Price pays the way is my tool of choice, and I'm going to try and demonstrate to you what I do with that today. As with every week that I do, try and educate you on the analysis process using price. Okay, Dow Jones Industrial Average, well, sure enough, we're back up to those highs again. The trend is still intact. We saw some selling waves occur down here, which really didn't do much for the market. It pushed it down a little bit, but the buyers have been very solid, and they pushed it back up to the highs again. So looking pretty good, the Dow still, and this volume the last couple of weeks has been pretty good. The acceleration has tailed off naturally, but we may see another boom ahead if we get through here again. So that looks pretty good, the Dow. It's holding up very, very well indeed. The Nasdaq is similar. Again, same sort of thing. We had some selling, a couple of big selling weeks here to try and push the price down. It hasn't. It's held up pretty well, so this looks great at the moment, the Nasdaq still. Brent crude is an interesting one again this week. Okay, this time we seem to be starting to edge our way above this resistance level we've been looking at for quite some time. And now it gets pretty interesting because we have had a pretty big rise, about fourfold in the last 18 months, but now it seems like we're pushing ahead above this old high from 2018 at 84.16, and it's getting very interesting here. Now we also look down below here and we look at our volume, which is excellent, and we look at our momentum, which is now starting to tick higher. Crowd behaviour is back on the move again. We had a little bit dip down here, and this really was a bit of a test for this market, but the buyers really have jumped back in, and in this instance the sellers will disappear, or they will just withdraw. So the Brent crude market looks good. Copper's also bounced back again. So again, we've seen this corrective pattern happen, but we've bounced back again. So the longer term trend still holds. Copper hasn't broken the highs back up yet, but it's looking very good. It's been a very quick rally. We saw some very good volume here on that big up week last week, and we're just hovering below it at the moment. No real selling's appeared, so that's a good sign. But this looks to me potentially as this corrective phase may be over. Solid support here. We've now banged up here. Sellers have got moved aside and let the buyers move. So that looks pretty good at copper as well. Gold is telling us nothing at this stage, and it's really, there's no inflation response from gold. There's all sorts of opinions on inflation at the moment, but gold certainly isn't concerned about it at this stage, although we did have a pretty big move up a year or two ago in gold, but it's just corrected back a little bit, and the jury's still out as we go sideways at the moment. So that's really not what's happening there. A little quick look at the Treasury note market, which we've looked at a couple of times recently. This is the US Treasury note market, and when interest rates go up, this price goes down. So here we looked at this whole pattern from the top here in the Treasury note, and we saw this big pullback here, which the market got very scary. Then it's a little bit of a lull into false insecurity here, and we're back down on the slide again, and we're disappearing below this S1 level again. Yields have hit their high at about 1.64 in America, and we can see some fairly heavy volume, big red bars here, and also momentum is going weak again. So this doesn't look all that flash here, and we've got S2 down here about 118 on the Treasury note market. So I'm just saying there's a bit of pressure on interest rates there, which might put a bit of pressure on equities. Who knows? We'll wait and see. Okay, let's go across the XJO. XJO again, it's also held support quite nicely there, as we can see. It's come back and held a 2020 high. There's a reasonable amount of selling here. It's now bounced back reasonably. We've got some interesting situations going on at the moment with a lot of rotation through energy stocks, coal stocks, mining stocks. So it's been quite an interesting period, and some of these mining stocks are going quite different directions at the moment, which is also making it very important to select your stocks. So the ASX 200 has looking pretty good. It's held S1 and is back here. I would expect this now to move back up towards R1. If it doesn't, then it's a bit more trouble because we get a lower high. But for the moment, the trend challenge has been accepted and success has come. So the ASX 200 still holds its big uptrend here. Okay, so now let's just go through the portfolio. It's down 1 this week to 77 stocks of 188 covered. The 5-stock portfolio is full with 5. The 10-stock portfolio has got 9 stocks in it, and the conservative portfolio has 8 out of 20. Our sectors are property, banks still, and diversified financials. So that's where the rotation's occurring back toward a little bit, those diversified financials. Our portfolio has been pretty strong again. I'm not too sure exactly what it is today. It's up about 14% since March. So that's going pretty well. And you can see how it does jump about a little bit, but you just got to hold your metal. Don't worry about the day-to-day moves. Just look at the end of the week. And if any stocks need to come out or not, though they will, but we haven't had any changes for a while since independence was knocked out. And I think WTC came in. So that's the portfolios at the moment. That's the XJO, all looking no real change for anything at the moment, okay? Apart from a couple of those commodities. Okay, so let's just get this back on site. Okay, this is JBH, our sort of weekly educational one that we're looking at. You know, really, it's rallied up to the average. It's found support here, which is fine. It's rallied up here, but I'm just saying to you here, we've got a lot of overhead resistance here, a lot of highs and a lot of resistance. This is going to find it really hard to get through. Okay, so despite good news on this one here, you know, it hasn't really rallied anywhere for a year or so now. So JB Hi-Fi still a watch. And we've got no real buying down here. We've got more selling than buying. The momentum's turned negative on this one again. So it may go sideways for quite a while, or it may come down. We don't know yet. But for the moment, it's not going up, and that's all we're really interested in. Okay, so now let's get to our next stock, a new high stock. We love new highs, as you know. They're very simple, they're very effective, they work very well, provided they are managed properly. But Macquarie Group's an interesting one because we really haven't been involved in any of this rally that occurred here during 2020. It climbed a big wall of worry here. We've got no reversal signal, so we didn't play, so we just still decide until we've got a new high here. Now we've got a signal that fits our qualifications. It's moved through to a new high here above about 150 back in March, and it's now nearly 196. So it's going gangbusters again. Where will this take us? Nobody knows. Just lift your stop and protect the profit that you're making fairly quickly at the moment, okay? So simple new high. Volume's been okay without being outrageous, but momentum is very good and it's well above the average. So we're getting a trend intensity rating of +10 at the moment, which is excellent for Macquarie Bank. Okay, now we'll go to what I call, which was originally a trend reversal and then became a new high, which is an endorsement of the trend in itself. It's been a bit of a bumpy ride for Metcash. Let me just have a little look here so you can see where we've come. This was the old highs back here. Metcash is currently trend intensity rating is 8. Okay, we had a trend reversal back here in November last year. It's then had a bit of a bumpy ride here, but it's still kept high lows, high lows, high lows. And throughout this period, we've got a bit of yield to protect us here. But it really has moved from about $3 a year ago to over $4. So there's a 20% rise there. The Metcash story still looks strong. It's making new highs. It's going well. It's in a corner of the market people like. It's added a bit of tools to its grocery items, so it's looking to expand into that area as well. So Metcash is still looking very good and rallying very well. Okay, what I thought I might have a look at here is a couple of copper stocks for you, because I know copper's been on the rise, and where do you get exposure? Well, it's sort of up to you. The horse has bolted a little bit when you look at stocks like Oz Minerals. It followed the huge rally in copper last year. And we got a good rally through that, but then we got to the stage where the price came back. So there's no real concern about it going down, but all we wanted to do is protect the profit. This is the money management process that I use. So we've got an excellent trend here. It's gone from $10 to above 20, so there's 100% there. And once this sort of thing happens, we go, okay, risk is back on. Let's just take our profit, stand aside, and come what may. And in this instance, it's bounced around a little bit. We've had some heavy selling occur in Oz Minerals here, okay, giving these buyers a good workout. But they've, it's been a bit volatile, but they've held their metal pretty well. And this jump here, like the actual copper price itself, has had a very fast jump. Sellers have just stepped aside for the moment. Okay, and it's actually gone up. Although the green bars have been okay, it hasn't been outrageous volume, but it's managed to push the price up quickly. and there are no sellers here at the moment selling this higher price. So Oz Minerals may well go again. If it does, it's a new high, and we just add to it again. But we protected the profit, we've waited for risk off, and now it's come again. So here we go again. So and also through this, we've seen the volume there, which we just talked about, but also the momentum, which came down considerably after this huge run up here, but it did stay positive throughout this move, which is a good thing, and it's now ticking high. So a very interesting looking position for Oz Minerals. Okay, then we go across to Sandfire, another one, gold copper sort of mixed with a lot of copper in there. If we look at Sandfire, let me just squeeze this up a little bit. Okay, so we can see Sandfire here, what it's been doing since, this is sort of 2018 when it hit its high. It came down here, didn't respond at all to the copper rally over the last year, sort of did, without sort of being outrageously compared to Oz Minerals, but it's now sort of come back down again. So we've got these little trends that I've just tried to identify here. It's now come back down again. So we're in this situation where it's come down below the average. Volume's been up and down, so a bit of two-way business going on there. This has turned neutral, so really it's a 50-50 offering, this one, and that's not what I like. So while that occurs, I'll just let this continue on and do what it does until it tells me something that it is going to do, makes the picture more clear for me. But for the moment, Oz Minerals is the one that would be on my radar for the moment if it makes a new high. So there's just a couple of copper stocks for you to have a look at there. Now we're going to move into Flight Centre. Now the Webjets, the Qantas, the Flight Centres have all had a bit of a run, which is interesting. Is it going to continue to go? Well, Victoria's now opening up. Queensland's going to open up, so this is a fairly exciting period. How much is this built into this? We've had a big rally here from in August from about $14 to up around $23 now. So it's been quite a quick rally, but very, very, very good volume here. Okay, so this is a fairly substantial move. We've got a little bit of a pullback happening there. I think it's down a bit again today. Just a little bit of post-lockdown, just a bit of a little bit of respite from there. So the price has just come off a little bit, but still, it still looks pretty good to me. This is a pretty good break up here through these highs here. So I would still expect this, still on the buy side, the long side, it's well above the average. The momentum is turning positive here, and volume has been very good. And see on the downside here, this volume hasn't been very much. I know we've got a day or two to go yet for this week, but at this stage it hasn't been gone much. So I'm still looking this stock to move higher. It's in trend, it's a qualified trend. The trend intensity rating is 9. All stocks have pullbacks. Don't worry too much at this stage. Okay, the next one I want to go into, there's a couple of stocks here now, the smaller end. One that I do cover, one that I don't. One that I covered back in July this year as an interesting opportunity, and one to observe more than anything. So a lot of stocks, when they come down, they've got to form this accumulation patterns to give us an idea on what they're going to do. So this is part of the accumulation phase that A2 Milk's going into. Which is a good thing after a big downtrend from $20 down to about $6. So let me just get this in the right position. Now you can see here the last review was back here in July, and I reviewed this with you guys on my YouTube video because we had this big downtrend in place here. Okay, all very, very negative. It got down to this point here. Down to this point just here at about $5. And then we saw a rally. Now the interesting thing about this rally here was on enormous volume. Compared to what we've seen before. So that was a good sign to me. Support, interest, value is being determined around this $5 level, and I can understand that if we're down for $20. So we look at this pattern and we go, okay, let's put this on the watch file and keep an eye on this one, okay? So A2M has since July, it's come down, it's tested it again, up here at 720, 730. It's come down and tested this again. Again, some fairly heavy volume on this selling here, but this support at 550 still held, which is a very good sign, considering we see this, and now we see a little bit of volume the last couple of weeks on this rally here to test R1. Now, trend intensity rating was -6 last week. So it's improved a little bit, but not got too outrageous. Whether we get a confirmation from trend intensity on a breakthrough here, I don't know at this stage. We'll have to wait and see what happens next week, see where it finishes at the end of the week. So, but we're in a stage where A2 Milk is certainly worth looking at, because it doesn't seem to want to go down anymore. It's just a matter of getting enough cumulative buys in here to be able to start pushing this price higher and pushing those sellers aside. So what I'm looking for is this seller-controlled trend to start changing through an accumulation phase into a buyer-controlled trend. Now, if I start to get a move above here, trend intensity starts turning up, then we're starting to build a case that we may have a turn here. So A2 milk is certainly worth watching. I know there's plenty of people positive out there. There's also people concerned about it being a one product wonder. But it has a very good brand, A2 milk, and I would suggest that this price is probably pretty weak at the moment. So it's certainly worth watching. We always wait for price to confirm our signals. What I think doesn't really matter. It's the price that will tell me. Price paves the way for me. So an interesting situation to look at, A2 milk. Now let's move outside my normal 170 and just do a little stock here called ImpediMed. Now, I don't know if any of you have seen this stock before, but it's been around for a while. It actually was at $1.80 a few years ago. It then came down and got smashed right down to about 3 cents, as can happen sometimes. But since then, we've got into an interesting situation around here where we've got, you can see these very big volume patterns here, these huge high volumes. They've all been attached to rallies, and this last, especially this big last sell-off, which has been taking literally a year, we've seen very, very little selling, a bit of a cumulative buying here, but not much selling at all. And all of a sudden you can see a bit of buying can push this price higher very quickly. So this is this week. It can still finish below there this week. It's not looking like it, but it could be. So we just wait until the end of the week. Trend intensity rating is +3 at the moment. It will move into positive territory if we close above here next week. We've got the volume, it's above the average, and this is now kicking into crowd behaviour mode, which is saying it's starting to move into positive territory. The crowd is going to start jumping on this. So there's a lot of potential on the upside for ImpediMed. So keep an eye on this one. It's a very interesting pattern. It's a typical trend reversal pattern, but as always, they don't always work out. So that's why we have a money management process in there to cut our losses and protect our profits. So ImpediMed's one for you to have a look at. It's an interesting picture. What I'm also going to do next week, I looked at another stock called Blackmores. I can't remember what it was, but it was a while ago. And Blackmores was been a big accumulation pattern. It tried to break up a while ago. It failed, but we're back looking fairly interesting at the moment. So I'm going to have a look at that chart next week. I know there's a bit of ructions on the board and stuff like that at the moment. Noel Marcus is a pretty stubborn old boy, but he's not going to go away anywhere quickly. But anyway, that's what I'm going to have a look at for you next week. Okay, now, that's all the stocks I've got for you today. Now, I just want to simplify things very much for you today. Talk about my plan, my 3-point checkout plan for you, okay? So it's really just, as I always do, I just try and keep things simple. The more exceptions to the rule you have, the more problems you're going to have, more results you're going to have. Just keep it really simple and easy to manage. It's hard enough making money as it is without complexity. So if you keep it simple, it will make life a lot easier for you. So I'm just going to give you a couple of ideas of what I do. Firstly, price pays the way for me. So that's my chosen tool. What I'm going to talk about here is for anybody who does fundamentals, technicals, does anything, you need to have these 3 things in your trade plan, okay? So price pays the way for me. Listen carefully to price, because it will tell you what it does, and it will, if you do that, will follow the yellow brick road to where you want to get to. Okay, the trends we follow, I'm a trend trader, trend and breakout trader, that's all I look for. Trends we follow are driven by natural human behaviour. It's our behaviour that drives the trends. Just like the waves in here, they come in and they go out, they're relentless and repetitive. There's always new opportunities, you don't have to get them all, you don't have to cover all the markets, just focus on a few stocks that will make you money. High conviction is what you need to do, okay, what I need to do. For my strategy. So the trends are just natural ebbs and flows of the market, okay? So the 3-point checkup, 3 key ingredients you need to have in your portfolio. One is you need to have a process. You need to know why you're going to buy so you know what to buy. How do you know why you're going to buy? You have a process that tells you what it is. It may be complicated, it may be simple. Mine is very simple, but you need to have a process. You have that process, you tick these boxes and you go, yes, I do. Okay, money management. Everybody needs to have money management because you don't necessarily be right all the time. So you need to have controls in place that will control you, control your trading, and money management does that for you. And it's what I use. Once I'm in a trade, it's totally managed my money. Okay, and the third one is discipline. I always go on about you need the discipline to do it. I have conversations with my members all the time about people saying, yes, I know what to do, but did I do it? No. I got out of that one too early, or I didn't take that stop. There's a lot of reasons people do it. So even my portfolio members, when I'm trying to train them how to train with discipline, they eventually get it. Some people get it, but some people don't at the start, and it can be quite confronting. But I will confront and I will tell you how to trade, and that's exactly what I'm trying to do, trying to help you with those portfolios to make money. So these are the essentials of any trading strategy. Whatever you do, you must have process, money management, and the discipline to do the right thing. Okay, that's the recipe for success. Okay, 3-point checkup. I only use 3 signals. I have 2 entry signals, a trend reversal, a new high, and I have an exit, which is my trailing stop. That's all I do. There's nothing hidden in what I do, nothing clever, nothing magical. Totally transparent, straightforward. It is just the matter of actually doing it that is the issue for a lot of people. So I try and keep it simple because it makes it a lot easier. So simplicity is of the essence. So you just need to follow those signs. If you follow those steps all along the way, you will be successful. Okay, 3-point checkup, the 3 don't forgets. Okay, don't forget to control your losses. Okay, absolutely important. The next one is protect your profits. It's a bit like Oz Minerals. We saw that huge trend, 100%. It comes down a little bit. We've got to protect that profit because we don't know if the market's going to go right back down again or go straight back up again. If it goes up again, we follow it. If it doesn't go, if it goes down, then we've done the right thing. Third one is cool heads make cool decisions. Responding to the market is not the way to do it, reacting to it. You control your own things. You should be predetermined in what you do. When the market does something, you should know what to do, not think about what you're going to do. So will I or won't I? Okay, so cool heads make cool decisions, and that's why I trade weekly, not hourly or daily. Okay, so build yourself a safety net, and that's what you will achieve. Okay, so there is nothing to stop you but yourself. Okay, just did it. And then you'll find all of a sudden the world will open up for you. Okay, so that's just a little bit about keeping things simple, making sure you do the right thing. Okay, so be simple, clear and precise. We follow the sunshine which lights our way ahead through thick and thin or warts and all, we will survive. GFCs, COVID, we will survive because we limit our losses and protect our profits always. It's a track you must stay on no matter what strategy you use, and if you do, you'll win. Okay, good luck for your trading week this week. Thanks for listening. I hope you all learned something today, and I'll see you all next week.